I'm Danielle Hale, Chief Economist for Realtor.com, and here's what you need to know this week. We start with the jobs report. The data show that in October, the unemployment rate continued to drop, while jobs were added in leisure and hospitality, professional and business services, retail trade, and the construction industries. While the monthly report showed a bigger unemployment rate drop in October than in September, the weekly report on jobless claims shows that improvement in the labor market slowed. The Fed is watching the labor market as it guides monetary policy, looking for maximum employment, a level we'd exceeded pre-pandemic, but now have an uphill climb to reach. In other words, Fed set rates are likely to stay low for a while. As I'm filming, the outcome of the presidential election is not yet determined, though that may change by the time you're watching. This uncertainty is one of several that contributed to a new record low in mortgage rates this week, the 12th new all-time low of the year. Lower rates give homebuyers more bang for their buck, which is a needed advantage in today's housing market. Additionally, these low rates are driving a bit of an unusual disconnect between a still improving economy and a frenzied housing market. The October Housing Trends report from Realtor.com shows that the typical home asking price was up more than 12% from last year. And homes sold not only faster than last year, but faster than September, something we haven't seen since 2011. Usually, the housing market cools off as pumpkin spice becomes ubiquitous, but this year, makeup buying and the pull of low mortgage rates, plus pandemic-related focus on home, have kept the housing market active. That doesn't mean we won't eventually see a cooling off. Housing demand growth is one of several components of the Housing Market Recovery Index that took a step back this week. Only listing price growth notched higher. Still, 44 of the 50 largest markets tracked by the index remain above the recovery benchmark. The top of the list reads like a tech town who's who, with San Jose, Seattle, Los Angeles, Boston, and Denver coming in as the most recovered markets. Find the trends in your market and download the data at Realtor.com/research, or follow us on Twitter for real-time updates. Have a question about the economy or housing market you want answered? Ask away.